Welcome back to the floor of the CME Group here in Chicago on Enjoyment, April 1st. I'm Killer from Treasury Curve. Treasury Curve is an institutional money market portal. We assist firms with overnight cash management. You know, you can just hear the tune, you know, Chubby Checker and the twist. We got some twisted thinking going on in this market. There was a great article a friend of mine, Coffee Grind, sent to me, and check it out here. You know, we'll post the link, but it's really talking about how this quantitative easing, you know, and that is an ugly name, let's be honest, folks. You know, the QE, it's just amazing. But this has been tried before. In the JFK administration back in 1961, they tried this program called the, you know, it was basically called the twist. And basically what they were trying to do was selling the short-term bonds and buying the long-term bonds. This was bringing, in their mind, hopefully going to bring those rates down. The same policy, the same principal idea that Uncle Ben is doing with the quantitative easing. So right now, you know, this long has been regarded as a failure since 1961. So we'll see how this works out. But right now, we are having so much Fed talk. Everywhere you look, there's a Fed president talking somewhere, saying their own opinion. Pretty hawkish out there. And they're selling it, and I don't know if the market's 100% buying it. But right now, we're seeing a nice little boost in the equity market. New highs in the S&P off this unemployment as well as this ISM number. You know, let's talk quickly yesterday about that action, that Treasury action. It was pretty sensational. We saw that ag report come out yesterday, limit up in the corner. You can hear the noise behind me. This grain room's rocking right now, folks. But as soon as that limit report came out yesterday, they sold off that Treasury complex all the way across the board. Bonds were down over a point, and it was like a vapor. It just, boom, it just dropped out. So a pretty sensational move. Since came back, and then overnight we've come up again. So this inflation situation, it's front and center again. People are really trying to figure out, when is the Fed going to move rates, and are they going to snap like a rubber band that some people are predicting? Yet, in the back of our minds, we know every $100 billion of this QE2 makes a difference into the market. So a lot of moving parts on the Fed talk. You know, seriously, every time I look up, there is someone talking, and most of them, 60% of them at least, are pretty hawkish right now. So be mindful of that as you're trading this bond market. You know, the S&P, like I stated, new high, 1332.75. We're seeing some trend line resistance up at 38, and that 50 days way down at 1302. Right now, they seem like out of control, but we'll see if we have a little late in the day sell-off here, because it is going to be hard to sustain these prices. You know, it's been the best first quarter since 1999, as well as the Dow Jones is currently at the highest level since June of 2008. You know, so we'll see how this pans out today. Next week could be a setup, but today let's not try and look for too much of a sell-off due to the fact it's the first day of the quarter and people like to come in and buy it. The European currency, you know, it fell out of bed pretty early today. You know, we saw it come all the way back down to 140.41, a big point-and-a-half sell-off here, and now it's come back a full penny. So right now at this 141.49 level, I tweeted that yesterday. You can get me on my Twitter at the Killer. But I tweeted that 141.49 is kind of a pivotal spot here. So let's see how this works out today. And oil, no one talks about oil anymore, folks, but guess what? It almost traded $108 a barrel. Pretty wild move. So the inflation situation, the ECB situation, we're going to see how it all pans out. From the floor of the CME Group, I'm the Killer. Remember, be the hammer, not the nail.